What's up, you guys? So I want to show you guys how I made money on V75 yesterday. Yesterday was quite a crazy day for me, all right, because in as much as I made money from V75, I also lost money. All right, I took 3 trades between Monday and Tuesday, and I lost 2 trades. All right, I lost 2 trades and I won 1 trade. But I can tell you that the 1 trade I won covered all in from the losses I made, and I even made profit as well. So that's why I keep preaching that risk management is key in this business, in this trading business. Risk management is very, very, very important. So I'm going to give you guys a rundown on what I saw, and I'm going to give you guys. I'm going to attach a picture of my losses and my wins so that you guys know that I'm transparent. So as I yesterday, when I came into the market, this was in the morning. Okay, I had my first entry on Monday night, which was around this level. Okay, let me delete this right here. Let me delete this line. This is V75, right? And certainly V75 is on a bullish trend. All right, this is, let me start from the weekly. Daily. Let's start from the weekly. As you can see, price has been tanking up. Remember what I said initially, that this move is just a mild retracement, that along the line price is going to continue its upward movement. So as you can see, as soon as price took off liquidity from this bullish candle right here, it took off internal liquidity right here, and it reacted from this key level right here. All right, it's a key level on the weekly. It's the previous resistance level in the past. So price respected that zone and started buying. All right, going to the daily, you can see that price gave us this candlestick pattern. This candlestick pattern is called a piercing pattern. All right, for those that know candlesticks, if you don't know your candlestick, I would advise you should go and read your candlestick Bible. So this candlestick pattern is known as a piercing pattern. That was a reversal pattern for buy continuation. So upon seeing that, I went to my 4 hours. Because as usual, I normally wait for all my time frames to align before I take or make any trading decision. All right, so as you can see, price made a change. There was a shift in market structure. We had, this was lower low, lower high, lower low, and then price gave us a higher high. All right, upon price giving all this higher, I knew very well that price is going to react from a particular zone before it gives us another higher high, which was what price did right here, and then gave us this higher high. And then I'm waiting for another retracement for price to keep giving us, higher highs to the upside. All right, until further notice. All right, so now the issue I had yesterday, the mistake I made yesterday was that I was in a hurry to buy. All right, this was a key level right here. It's one of my key levels right here. I just marked with a blue line. All right, so price came into that key level. All right, price came into that key level, and let me cancel this. So price came into that key level, and I thought it was going to buy. All right, I'm going to mark out this price reaction on that key level with this box, so that when we go to the lower time frame, we'll be able to understand better. All right, so price came to that key level, and as usual, I go to my 15 minutes. Why am I looking out for a change of character or a shift in market structure? All right, which happened there. All right, which happened there. So as soon as the price shifted, as soon as I saw this shift, which was around this level, I entered my first position, and price took me out. All right, that was the first loss I had. All right, price did the same thing here as well. It also took me out. So I left that. I had to stop trading for a while. All right, I had to stop trading for a while, and then to cut the whole long story short, so that I won't bore you guys with unnecessary details. All right, what happened was that at the end of the day, I discovered that I did not pay attention to my premium and discount level. All right, I did not pay attention to my premium and discount level. If I had, I would have waited for price to retrace at least to 38% or 50% of my Fibonacci level before I take a trade. But I didn't do that. I was just in a hurry and I made a couple of losses. So I've learned that as a lesson that going forward into the future, I must wait for price to make a real retracement, either into the 38% of my Fibonacci level or the 50% of my Fibonacci level before I take a trade. That move will help me to cut off my losses and to help me to stop taking unnecessary trades. All right. So this level right here was my 38.2%. My Fibonacci. I'll mark this right here to here. 38% of my Fibonacci. All right. So upon seeing that, I looked for a key level on that particular zone. So going to the past, if you see this key level, price acted right here. This was a support key level that was violated once, violated twice. Then it acted as the resistance, acted as a support in the past. So going forward, I knew very well that price was going to respect that zone. As soon as price came into that zone, I went again to my 15 minutes to look for a change of character, which was not clearly visible. All right, so which was not clearly visible. So if I see that my shift in market structure is not clearly visible on the 15 minutes, I usually go to the 5 minutes. Right, going to the 5 minutes, I was able to see that there was a clear shift in market structure, which is this. Right, upon seeing that clear shift on market structure, I waited for the candle to break out and then I took my position from there. All right, I took my position from there and then I targeted the next high, which is this. That was my final target. This move alone covered all the losses, all the 3 losses I made before this trade. All right. The reason why I did not blow my account was because when I was making losses was because I applied good risk management, which is very, very important. I was only risking 1% of my accounts per trade. 1% of my accounts per trade. No matter what I do, just 1%. So it helped keep me in the game. For some people, when you make a couple of losses, you might be emotional and you might want to increase your lot size, increase your percentage to something that I would advise you not to do so. All right, losses are part of the game. You understand? So in as much as you make losses, you can still make wins, like crazy wins. So even when you are on your losing streak, always maintain your percentage. That means if you're risking 1% on a trade, all right, even when you're on a losing streak, always maintain that particular percent. Don't go higher, because the more you go higher, the more you worsen your losing streak. So I don't want to talk much about this. So what I'm currently looking out for right now on V75 is I'm looking out for a retracement, some price to come in to a good zone and then react from any of this react from any of my key levels and then give me an upward push. But for now, I'm sitting on my hands and I'm waiting for price to come to that zone. So this is my Fibonacci. If price comes into this zone that I've marked with the blue line, that marked with the blue line right here, then I'll be willing to continue the buys on V75. All right, I'm willing to continue the buys on V75. So if this plays out, I'm going to be sending the setup to my Telegram channel. All right, if you've not joined, the link is on my bio. Join so that you will get quality setups and signals from me all for free. So that's for V75. So let me go to V25. I don't want to talk much. V25 is it's quite dicey because on the weekly, V25 has been on a downtrend. All right, now price has, sorry guys, let me delete this. Price has, price bought and came and bought into this key level right here. This key level right here is an open close key level. Upon price reaching that level, all right, price started rejecting, which is what it's currently doing on the weekly. As usual, as you guys know, I love all my time frames to be in alignment before I make any trading decision. All right, so the daily right now, though it hasn't finished for me, all right, it hasn't finished for me, but currently this daily candle is engulfing the previous daily candle. It is aligning with the weekly candle. All right, that's what price is currently doing right now. The 4 hours, let's see what the 4 hours has got for us. This was before, this yellow line here, right here, is my open and close key level. So price has been buying. We had this higher low, higher high, higher low, higher high. All right, if price takes off this higher low, then I'll see that it is time for a sell to continue. So I'll be looking out for lower lows, lower highs, lower highs, lower lows, and what have you. But for now, I'm sitting on my hands. I want to see how price will react. And then I'll know what to do next. So guys, these are all my expectations and setups for today, for this week. All right, so I will be dropping setups as soon as they appear. All right, so if you've not joined the Telegram channel, join the channel right now, so that you miss a whole lot of quality setups. All right, so a recap on what I earlier said: always prioritize risk management. It's very, very important. Risk management will help you when you are on your losing streak. I can't emphasize this enough. Risk management is very, very important. All right, always journal your trades. It will also help you. All right, so thank you very much guys for watching this video. If you want more breakdown of my trading setups, you can. I have a lot of videos on my channel that talks about how I take my trades, the psychology behind the trades I take, what I see. They're all on my YouTube channel, so guys, go and check them out. All right, thank you very much guys for watching this video, and see you on the next one. Cheers guys.